area. So when candles are rejecting this area, what you're saying is that, okay, if it's heading down, where will your stop loss be? So safe stop loss is going to be above the previous 1 hour candle, because now you have this range to go down to the support. Makes sense? So this is 996. So you have 996, you have 896, 10 pips, 796, 20 pips, 696, 30 pip, 30 pip range, almost 35 pip range right here. What if the last candle closes bullish, something like that? If it closes bullish, we'll look at it. But if it's not closed bullish, right? That way, now that way you can come up with a lot of questions. Let's say you can say, oh, what if this candle closes like this? Then it's going to go up, right? So every situation is different, right? What if situations, there are a lot of those, but we only focus on what we see on the chart, right? Most people, they don't take trades because they have a lot of what if scenarios running in their mind, right? When you have a lot of what ifs running in your mind, then you don't take trades, because let's say that you do take a sell, right? You do take a sell, and then constantly you're thinking, oh, what if it goes up? What if it hits my stop loss? What if it does this? What if news comes and does this? You know, like people never think that, oh, what if it goes in profits? You will never think that. Man, guys always think, okay, what if it goes against me? That's the only what if that's running in their mind. What if it fucks me? You have to think positive. You know, if it makes sense, just think positive. Always think, what if it goes in profits? You know, think the positive. It's better to always wait for candle to close in our way for the same bullish. Yes, it's always important to wait for candles to close. Yep, always wait for candles to close. Next week when we go live, we're gonna see a lot of live examples. All right, let's go to the next example here. All right, continuation through zones. All right, we have a lot of BS happening here on the 15-minute chart. So we're gonna wait. You see now price is coming up to a zone over here. You see resistance zone, prices, resistance zone. So now price is starting to consolidate. It broke up. See this? Price broke up, right? Price broke up. So now you got to wait to see if price is going to come down for a retest so you can take a trade. See this? Price broke up, came down for a retest, and then it did another retest and continuation. It's going to start to move up again. But now you can see price is starting to range again. Let's see what happens next. I think this was an example of a fake out. Yeah, this was an example of a fake out. So I think we have a higher time frame here as well. Higher time frame. Do we have higher time frame? No, we don't have higher time. Yeah, we do have higher time frame. This is a higher time frame. This is the 30-minute time frame. And then this is the 1 hour time frame. So let's look at the 30-minute time frame. 30-minute time frame makes yeah, goat shit. Very nice. Because the price action was not good at all. There was no good price action. There was a lot of consolidation here. This is very important. Kevo, you've passed this test. Kevo have passed this test because like a lot of people are gonna try to make sense of consolidation when it won't make any sense at all. So it's better to just like stay away and to just, you know, calm down. Because now when you do some analysis on the 30-minute time frame, because the 15-minute looked very, very messy, you see that we had resistance here. And then price broke up and started to do its dirty dance, whatever it was trying to do. And then you had this candle here. It closed back inside the range. So now if you've been following me, if you've seen Twitch, you know that when candle closed back in the range, this means that the move up was a fake out. And then you have this move coming down, and when you're looking left, you see that there were clean moves up. You see that there was no traffic previously. So based on that fact, you can say that, okay, easily we can come down to this support. And then you get this bonus move down. But the idea is that you are being certain that, okay, we're approaching support. So this is where you should put on the brakes. I would probably took a trade directly after the retest. Maybe this is an aggressive entry, yes. What if you are caught in the fake out? Do you cut in reverse or you just cut and not enter again? Very good question. So you just cut, right? If you get caught in a trade, you just take the loss and then you just sit tight, right? Never reverse. If you are not experienced enough, I would never recommend you to reverse. That's just a failing plan right there. So you should never reverse from that. Man, we got a lot of examples here. Can this method work on daily and higher time frame only? Yes, because candles move the same way. Candles move the same way in the 15-minute, on the 30-minute, the 1 hour, 4 hour, daily. Candles all move the same way. But the problem with the higher time frame is that you have to wait longer. If you're looking at the daily, you have to wait for 1 or 2 daily candles to close. That's the only issue. The higher the time frame, the longer the wait. Okay. What's this? Okay, this is the same chart. Got nothing but time. Oh, yeah, got nothing but time. It's awesome. All right. This is the 15-minute chart here. So I think this was after the news. This was after the news. So we have basically price had formed resistance here, and then price broke out. Now price is starting to consolidate. It's starting to come down, coming down further. So now it's coming down to the zone, right? So now what you can see is that maybe, like, the body of the bearish candles and the formation of the wicks, it may seem as if that they're exhausting, right? So what's the bias here? The bias here is bullish, and it's coming down to this resistance area. So step 1 is bias. Step 2 is, where will your stop loss be? You have to identify a stop loss area. Maybe it's going to be somewhere below this way here, right? Or it would be somewhere even lower. Yep, you waited for the bullish, and now you can say, okay, we have a bullish candle. So maybe now we can have a stop below the bullish candle. JC was right. And then you go next, see what happens, and it starts to move up. Where does it go? It goes up to where it made the high right here, because now price made a high, it's coming down, it's forming support, and then once it's formed support, there's momentum bullish, it should go up to retest this high. Can you explain a bit about rejection wicks? What does that tell you? Rejection wicks, rejection wicks mean that price is rejecting the area, but after rejection wicks, you need to wait for the opposite candle, which is the bullish candle right here. You need to wait for this candle, because these rejection wicks mean nothing. Because sometimes, you can have a lot of rejection wicks and price can just continue falling. So it's important to wait for a bullish candle. I would say wait for the 30-minute as well, but this is just for like simplicity, just for example's sake. So the bullish confirmation increases the probability of the trade? Yes. Yes, it does. It does. Yeah, so it's just a small indicator, those rejection wicks and stuff. Okay, let's go to the let's go to the next one here. See this? So this is the 30-minute time. 30-minute did not give you enough, like confirmation. Check this out. It just found a weak bearish candle, and the next 30-minute it continued to go up because hey, maybe there's a lot of volume in the market. And this was the 1 hour. So you see how there's different information. On the 15-minute, you have some more information where it can give you an idea to enter. But on the 30-minute, it's just one straight candle. Yeah, so you have to be really cognizant of all the time frames, how they're forming. It's very, very important. You have to know how all the time frames are forming. Raja, on the USD CAD, better to look for entries on 15-minute than 15-minute, or you possibly miss. Yeah, it depends on what the chart is doing, right? It depends on what the chart is doing. Because if you're going off the bias that, okay, we made a high over here, and if it's making support, so if the support gets respected, price should retest this high right here, right? It doesn't matter if you enter on the 15-minute or 30-minute because your stop loss is going to stay the same. You have the same stop loss and you have the same target. That's the most important thing. Yeah. So on the smaller time frames, the only thing that you're going to see different is going to be a lot of more like extra information. Okay, let's go to the next one. This was a 30-minute. Is it 700 hours support? What's this? If you would like a trade after that big bullish candle, would you set the stop loss under the R, which becomes support? Under the R, which becomes support? I don't know what that means, Tim. You're under the resistance that becomes support. Oh, this one? Yeah, I would traditionally not do that if I miss it. Because at this time, I'm thinking, okay, might need to have a stop below this 30-minute candle. Because entering here would be very risky. Because if you miss the trade, man, you missed the trade. Because if I wake up in the morning, and if I see price has moved a lot, there have been big candles, I know that, fuck, I've missed the trade. Yeah, and the distance is big too. So it's really important to know when you've missed the trade. Yeah, it's better to miss a trade than to take a loss. I've learned the hard way. So trust me when I say that. All right. Okay, what's going on here? We had resistance, where it's kind of some sort of, it's trying to make some sort of a support right over here. Right? It's trying to make some sort of a support. There is resistance right over here. Okay. Let's see how the next candle goes. Oh, damn, the next candle went up. The next candle went up. So now what are you doing? Now, since you waited for this candle to close, you're looking left, right? Let's take a look left. You're looking left and you see that, okay, maybe now price is coming into an area where it might have problems breaking, because you see how the candles, how this candle rejected this area, how these two candles rejected this area, how this candle rejected this area. So now it's not important that price is going to continue moving up, because you're looking left and you see this area as a high traffic area. On the smaller time frames, there's going to be a lot of consolidation here, and this is where I think the price should start to price should start to stall. So let's take a look what next candle does. Okay, we have a retracement. We have a retracement down. So what does this mean? Price broke up. The next price is coming down to retest, waiting. There we go. We have a bullish candle now. So now what do we do? Entry. And where are we keeping the stop loss? Possibly keeping the stop loss down over here, under the candle. Exactly, and then see what happens next. Price starts to go up. Price continues to go up. Entry stop loss reason. Yeah, exactly, right? Because this was a break, and you waited for the retest. Are you going to do quizzes? I think I'm going to do quizzes at the end. At the end. I don't know if this is out of topic. Say you are in a position, example, you entered after the first bullish candle. Enter you after the first bullish candle after the support. You are still in the position as needed. Your stop loss on TP has been hit. And there's an important news coming in. Do you exit before or do you wait for the news? I exit. When there's news in and I'm still in lingo, when my position is still in lingo, I exit. Because news, you don't know what's going to do, right? Flow chart, question mark. No, I think it's going to be, I'll try to put in MCQs, but you know, like we'll see what we can come up with, right? So now when price is moving up, you're constantly looking to see what's happening, right? So when you look left, you see, okay, now there might be some problem because you see all these wicks here, right? You see these candles reversing. So this might be an area where you say, okay, you know what, maybe this is the time where I should exit or wait. Because when we look left, oh, price is starting to go up again. And then we're heading down. So now we're heading down. You see this candle close? This candle is closing below these candles here. So this, you can see this should continue moving down. Big move down. What's this? Question. GBP USD, this example in 30 minutes, it made the first bullish candle for confirmation going higher. When on the next 30 minutes would you enter? Will you go in that drawdown or wait for it to go lower than enter? Well, here's the thing. When this candle finished bullish, right? And you know your stop is going to be somewhere over here, below the previous 30-minute candle. So now it's up to you where you want to enter because you have your stop in place, right? So now when you have your stop in place, what you got to ask yourself is, okay, if I take a buy, what am I risking, right? What's my risk on this trade if I take a buy, right? Is your risk 5%? Is your risk 2% or 3%? Right? That's what you have to come up with your risk. What's your risk? If you want to wait to see if price comes down to take an entry, you can take an entry here, over here, or over here. But you have to know what you're risking because number one, you know price is doing a break and a retest to go up. Okay, that's a done deal. Number two is you need to understand where your stop loss is going to be. Where are you going to place your stop loss? That's what you have to mark down. So number two, stop loss below the previous 30-minute candle. Number three is execution, right? Whether you execute by waiting or whether you execute at the start of the candle. The most important thing is that you have your stop in place. Your stop loss means that if price goes below this level, then your trade is no longer valid. That's a very important concept I want everyone to know. What I noticed on Twitch, sir, after the confirmation candle, we entered, but the candle after the confirmation candle takes a retest for the support. So you entered there to get a better entry. I saw it after kind of bullshitting, right? Yes, exactly. Yeah, sometimes, you know, like you could wait when the candle is bearish, you can wait in the anticipation that the candle is going to continue bullish. Like, so that all comes with practice. That all comes with seeing the same, because I've seen the same thing happen over and over and over again, right? If I have seen it, let's say 60, 50 times, someone who's coming new, they have seen this happen maybe 4 or 5 times. So maybe you need to see it happen live over and over again so that you can train your eyes to the movement, or you can train your eyes to the way it moves in that respect. Yeah, right. So most of your practice is going to come with watching things happen over and over again. Okay, so this is the 15-minute chart. This 15-minute chart shows a little bit more information that we did not see on the 30-minute chart. So just for the sake of learning, we're just going to look at the way how the market structure was, right? We had a breakout, 15-minute candle closed bearish, went down. Next one, rejected support. So now the interesting thing to know is that look at how these candles were closing. They were creating support and they were creating these big wicks, which, remember we talked about this as like a rocket ship. So they started to create this support acting as a rocket ship, and then we continued to go up. We continued to go up, and then when you look left, we're approaching a high traffic area right over here, right? When we're approaching a high traffic area, price starts to consolidate. When price starts to consolidate, this is now beginning to start rejecting this zone because there's a high traffic. It already made its move up, so now it starts to go down. It starts to go down. Now, the most important thing to note is that this was your strong resistance here, right? Which became your strong support, right? And then you had this bearish candle close below the support, and then price started to form resistance again on the 15-minute. So when entering on this retest, I think this bearish candle here was the key. When it rejected resistance. It rejected resistance, and then, when you look left, you see that this is also strong resistance, so price should come back down. Because now maybe this whole move up was a fake out, because price closed back in the range and it started to go back down. Makes sense? So reading candles is very, very important. Your aim should be to be the best at reading candles. I think that's what your aim should be. Okay, so now we're going to go towards a fact about fake outs. See, so this was the 1 hour time frame. Because now if you look on the 1 hour time frame, it looks much, much more simple, because if you had resistance here, see, and then these candles here, they did a retest to go up. They went up. And then now you have clean candles. Now look at this bearish candle. It closed back below this resistance earlier. And then you have a move down. Right? So now when this candle came down to support, see, this was support here, and then you waited for this to close. It closed above support. You waited for this candle to close. It closed above support too. So now you can turn around and say that, okay, now, hey, maybe this support is being respected. So you can turn around and say, okay, maybe the support is being respected, so it might start to go up. So what do you got to do? You got to wait for a bullish candle to form here so that you can take buys for it to go up. But instead of a bullish candle, there's a bearish candle closing back in the range. So when it closes back in the range, you automatically say, okay, yeah, it's not going up now. It's going down because I'm fluid. I'm watching the candles form, and the candles are forming below support resistance, so it should continue moving down. So you enter immediately after a candle closes of 1 hour, or wait to get a better price on the small time frames? We wait for confirmations. Always wait for candles to close in the direction you want. Okay? If it's because, some guys would say, okay, yeah, you know what, the 1 hour candle over here it closed above support, so I'm going to take buys. But if you're going to take buys, the 1 hour candle hasn't turned bullish yet, so you can't take buys. It's still bearish. And then you have this 1 hour candle go below support and bearish. So now you know, okay, we're going bearish because it formed below support. You look left, you see that we had a clean move up previously. So now if it's heading down, it should head down to this area mirroring this whole move. So if you're biased for long due to your evaluation on 4 hour and daily, yeah, if it's bullish, then you're probably gonna wait for the bullish candle, because if your bias is bullish on the 4 hour and daily, and if you don't see any bullish confirmation on the 1 hour, then you don't trade at all, because you're not getting that bullish confirmation. Then you don't trade, you stay out of it, right? But if you're scalping, then you're looking at candles on the 1 hour and the 30-minute if you're scalping. But if you're on the daily time frame, then you're waiting for the 1 hour and the 4 hour candle, which means that you're waiting longer for your trades. Yeah. So basically, continuation through zones is break and retest. Right? It's very simple. It's just simple break and retest when you have continuation through the zones. Okay, so we got 2 more sections left. We have fake outs. We're going to go over fake outs. We're going to go over breakout candles, and we're going to go over chart traffic, and then we're going to take a little break. So I think maybe another hour before we take another break. It's actually really fun. In those situations where it doesn't come back to retest, do you avoid entering? Yes, you avoid entering. That's the whole thing. You don't enter, because if you're, how long is this class going to last? I think we have 2 more hours, I would say. I would say 2 more hours to go. But this is being recorded too, so if you want to leave, that's okay. You can come back and watch the recording. All right. Let's go towards fake outs. Fake outs. So in very simple terms, fake outs are basically failed break and retests. Okay, so I'm just gonna let you guys absorb that a little bit, right? If a breakout fails, it becomes a fake out setup. Make sense? Let's do this. Let's say you have resistance and then you have support. Price breaks out, does a retest, goes back in, and then continues going down, right? So this breakout failed. This break and retest failed. It became a fake out to the upside, and then move happened, going down, right? So generally you can wait for the 30-minute candle to close, but you can't really anticipate a fake out unless it already happens, right? Because sometimes, you know, when price breaks resistance, it comes down to, you know, resistance turn support. Some people take aggressive buys, and then price continues to go down, and they're like, oh man, you know what the fuck? This was a break and retest. But if you waited for the candle to close, you will see that the candle closed back inside the range. So the break and retest, it didn't happen, because when the candle closed back in the range, it's going to continue going up. I learned that the hard way, and when I was like really looking at it, it's just started to make sense to me. I'm like, oh shit, this makes a lot of sense. Yeah. Here's something to think about. When a fake out happens, it's like the price goes right back in the range and comes through the opposite side 70% of the time, right? This means that when price is consolidating, take a look at this. When price is consolidating, let's say it breaks out to the downside, does a little bit of a retest, continues to go down, but goes back in the range, right? It goes back in the range, does a retest down over here, continues up, and keeps going outside of the opposite side. This happens 70% of the time, right? So we're going to go over some examples here. Bearish fake out. Yeah, exactly. So this was a bearish fake out. Faked out to the bearish side and then continued to move up. Good job, Alejandro. I think Alejandro joined last night or this morning. Okay. All right. There you go. Now, fake outs. I think fake outs are very, very easy setups. How long this webinar been on for? We started around 9:30, 10, 11, 12. We started 4 hours ago. Oh, 4 hours, only 1 5-minute break. Wow, that's pretty good. All right. So let's see. So now you have this candle, it broke out, right? So basically now you're going to look for a bearish candle to do a retest to go up, right? But let's see what happens. Okay, we have a bearish candle here down at support because this resistance becomes support. And then, now we have consolidation happening. But if you tried to take a buy based on this candle here, right? Because, it broke out, bearish candle did a retest. So now this bullish candle formed. So now you can say, okay, what we can do is, what's this? Why it passed so fast? I didn't knew it's been 4 hours. Yeah, it's been 4 hours. So now what you can do is, when you see this bullish candle form, you can have a stop below this candle, and you can say, okay, you know what? Break and retest, we're continuing to go up. So now remember, there's a probability of break and retest, right? So now this candle stops you out.